For centuries, bookkeeping was this grueling, heavily paper-reliant process. But today, information technology has completely flipped the script. Welcome to this explainer. We're going to dive right into how this digital shift actually happened, the incredible superpowers it gives modern businesses, and why financial decision-making is literally never going back to the way it was. Let's get into it. We've got a great lineup today. We'll kick things off with the accounting revolution, look at the superpowers of digital systems, and then break down the anatomy of a CAS. After that, we'll see exactly how data gets processed, and we'll wrap it all up with a classic showdown, manual versus computerized accounting.
Okay, part one, the accounting revolution. Seriously, ask yourself, how long would a modern company survive if every single transaction had to be recorded, calculated, and carried forward by hand in those massive physical ledgers? Just think about the sheer volume of daily transactions for a global company today. If we were still relying entirely on human calculation, the whole business world would just grind to a halt. The margin for error would be absolutely massive, and the speed of business would be agonizingly slow. This huge operational bottleneck, that's exactly what forced the digital shift. Now, a computerized accounting system, or CAS for short, isn't just a basic desktop calculator. The real magic here isn't just the automation part, it's the strict compliance. Even with lightning-fast internet and automated data, a CAS rigidly adheres to GAPE, generally accepted accounting principles. Basically, these are software programs built to securely store data and run the entire accounting process. The fundamental rules of finance haven't changed at all. We just got a massive upgrade to the engine we use to navigate them. Moving on to Section 2, the superpowers of digital systems.
Imagine literally never having to manually tally a ledger again. That's the power of automation. The software handles all your additions, subtractions, and complex calculations instantly. And that brings us right to accuracy. Look, software doesn't get tired at 5 p.m. and accidentally drop a zero, right? It pretty much eliminates human math errors entirely. Then there's the speed factor. Because of customized templates, data entry is insanely fast, and your financial statements can be generated in fractions of a second. Naturally, all this speed leads straight to your bottom line, with serious cost reduction. Entering data just once saves a massive amount of time, letting businesses run a lot leaner. But the ultimate superpower? Quick decision-making. Having real-time MIS reports gives management the instant leverage they need to pivot and plan on the fly.
And beyond just crunching numbers faster, the structural benefits are just astounding. Think about storage. Instead of renting out warehouses full of dusty physical registers for every financial year, your computer packs years of voluminous data compactly onto a hard drive, complete with easy external backups. Security gets a huge upgrade too. Passwords and access codes keep everything highly confidential, and you can even set up specific controls for different users. Then we've got multi-user facilities, which is an absolute game changer for larger companies. Multiple operators can enter data at the exact same time on different computers, whether they're sitting in the office or working remotely. Add in the ability to transfer reports globally in seconds and the total transparency it brings to your day-to-day operations, well, you can easily see why these systems are totally indispensable.
All right, Section 3, the anatomy of CAS. Let's look under the hood.
A computerized accounting system is basically built on 3 essential pillars. First up is the hardware. This is your electronic equipment, the computers, disk drives, monitors, printers, and of course the network connecting it all. Second, the software. These are the programs directing the computer to actually do the work, like accepting, editing, and storing your transactions to generate reports. But the third pillar, that's probably the most vital one. Company personnel. You can go out and buy the fastest hardware and the most cutting-edge software, but without trained people to plan the security and interpret the actual data, the whole system is useless. The human element is absolutely the crucial link here.
And this setup unlocks some incredible geographic flexibility. Because modern systems use networks and central servers for data, the physical location of your team is completely flexible. Think about it. An auditor sitting with a laptop in Maharashtra can instantly tap into a client server all the way down in Kerala. This means much faster audits and a massive reduction in travel costs. It has fundamentally changed how accounting services are delivered.
Section 4, how data gets processed. It helps to think of this like a highly efficient engine. First, you feed it raw fuel. That's your input data, things like sales receipts, bank deposit slips, or purchase orders. The software then acts as the engine block, processing that data by automatically routing it through your configured ledger accounts. It knows exactly what to do based on the accounting groups you've set up, like your assets or liabilities. And finally, you get the output.
These are your high-level, perfectly balanced reports, like your profit and loss accounts and balance sheets, all ready for immediate decision-making.
Which brings us to Section 5, the ultimate showdown, manual versus computerized accounting. Just look at the immediate operational contrast here. In manual accounting, you are dealing with physical registers, literally hand-calculating debits and credits just to find your balances. But in a computerized system, the math is completely invisible and instant. Manually, a human actually has to post to ledger accounts, which carries a huge risk of transcription errors. Digitally, you just enter a voucher once, and the software perfectly distributes it everywhere. This means you have a real-time trial balance accessible whenever you need it.
And the differences become even more stark when we look at end-of-cycle tasks. Take adjustment entries. In a manual setup, both the journal entry and the ledger posting have to be done painstakingly, one by one. But digitally, you just pass the entry, and the posting is totally automatic. Generating financial statements manually means very carefully transferring figures by hand. In a CAS, those statements are generated automatically and update instantly with every single new voucher entry. And finally, closing the books. At the end of the year, while a manual accountant is stressing out over carrying balances forward on paper, the computerized system has already auto-generated the reports and carried all the balances forward to the new year without breaking a sweat.
So, as we wrap things up today, I want you to remember this. Software offers some incredible automation and speed, but it's the humans who still drive the logic. Now, a business might rely on a basic free and open source option, or maybe a fully customized or tailored ready-to-use package. They might use industry-standard legal software like Tally to manage everything from contra and receipt to sales and purchase vouchers. But whatever they use, the system is truly only as good as the mind operating it. Oh, and a quick side note. Using proper legal software ensures you have security and support, whereas pirated copies risk absolutely everything you've built. The software lifts the heavy data, but you are the one making the strategic decisions. As these digital tools become even more advanced, the question is, how will you use them to transform your own operations? Thanks so much for joining me on this explainer. Keep learning, and I'll catch you next time.